With the budget event behind us, the markets were not done yet with their gains, and you saw yet another good session for us. To be fair, of course, you had a very strong handover coming in from the global equity markets as well. US had a very strong close, and remember, Google, or rather Alphabet, did post extremely strong beat when it came to its fourth quarter numbers, and you saw the stock pop up quite a fair bit. So good handover from US, while Asia, most of the Asian markets were shut once again, but the ones which were open as well were rubbing off and taking their cues from US equity markets. So the SGX Nifty as well in the morning was indicating a strong pop-up start for us, and pop-up it was, and we finally managed to close in pretty much around the session highs today. So over a 200-point rally is what you've gone home with. 17,800 is where we shut shop for the day. Good day even for the broader end of the market, and you had a very steady move on the advanced decline ratio from the word go today, finally closing in with an over 155-point count coming in for the winners in today's trading session. Sectorally, while cement was a bit of a laggard, so was real estate, but remember, some of these stocks popped up pretty hard yesterday, reacting to that infra push in the budget, but today really belonged to banking once again. Financials came back to the fore, telecom held out very smartly, and pharmaceuticals along with financials too saw a very smart move coming in. So IndusInd Bank once again, after that big pop on the stock today as well, it saw a very smart follow through, another 5.25% move coming in here. Bajaj Finserve, Bajaj Finance as well were very big movers. HCL Technologies, Kotak Bank, Bajaj Financials, HDFC Life, Divis, Axis Bank, these were all very steady performers. From amidst the broader market as well, you had a Lal Path Labs, for instance, which shot up about 7.5%, Canfin Homes, GSPL, and then Idea, which saw a good pop of about almost 7% coming in today's trading session. The big debate, of course, after the budget and once we digested the knee-jerk reaction was the inflationary impact of the budget. And two of the biggest market voices that we spoke with after the budget speech, that's Inam Group's founder, Vallabh Bhansali, as well as Rare Enterprises, Rakesh Jhunjhunwala, investor and trader. And the point that we're getting is that even if you were to see any interest rate hike coming in, and if the Fed does move ahead of the RBI, which possibly is going to be the case, you're not going to see anything beyond a knee-jerk reaction coming in from the equity markets. And what also all the experts helped us remind was that, remember, even in the previous regimes, when you have had high interest rates, we have seen roaring bull markets as well. So while the interest rates, inflation could be a concern for the markets, that's going to be at best a knee-jerk reaction. And in any case, the high interest rate or the high inflationary environment is something that the market has already been pricing in. Inflation is not really new to the markets. That said, what one really needs to see in the near term, of course, is what happens to global markets, because while no one's predicting a major corrections, no one's ruling out minute corrections, and that's really going to be either a big geopolitical event which transpires or a big local event which one cannot really foresee right now. And there are no big events as well lined up in that sense for the market. The earnings season is pretty much done with. So that said, the big cue really has to come in from the global markets in order to derail this recovery that one is seeing right now.